This is Justin Pulitzer. This is my weekend review video for Sunday, April 2nd, 2017. Happy April Fools, although we're a day late for that. Good amount of stuff that went on this weekend. First and foremost, we're officially through the first quarter of the year. I hope everyone did well. Let's talk a little bit about what's going on in the backdrop of the market. We'll get into my 7 to now 10 kind of keys to the market. We'll get into the major market indices, and I'll try and do as many momentum stocks as I can possibly cram in a reasonable amount of time. First and foremost, there's a lot of negativity that still surrounds the market. Every pullback of any day, any 5-minute or 15-minute candle, I can't even tell you how many. Anytime we have a big down candle on any time period, no matter how big or small it is, my DMs fill up with all kinds of downside projections, and the tone just totally gets negative. Everyone's talking about, how bullish the market is. There is no euphoria. I've been trading for quite many years, and I can tell you we are not in a euphoric market. Keep in mind, it doesn't help that you're getting news from people who have an agenda. The media, for the most part, and listen, this doesn't really matter about your political affiliation, but I'll just tell you this. The media is overly liberal and overly biased. They've hated Donald Trump from the beginning, and they hate him now. Anything that goes on is made to be like the end of the world. For example, the repeal and replace of Obamacare didn't quite get enough votes to go through. And I can't even tell you how many times I heard people comparing it to TARP 2, the market's going to be down this huge amount. Anyone who told you that, or anyone who professes that, has no idea what the hell they're talking about. Nothing in that repeal and replace would have anything to do with the credit markets, would have anything to do with ATMs working, with anything to do with companies making payrolls. Yeah, I mean, it's a bit of a setback, but it's not nearly on the level of what was going on during the financial crisis. I think that a lot of that also has to do with recency bias, that people are so used to these events causing shocks that they sort of just assume all events are created equal. Not the case. I'll say this. I was early on saying that I thought both Brexit and Trump would happen. I said I thought the market wanted that, and I said I can tell you I was in the minority, and all of that is time-stamped and recorded. So I think I have a little bit of street cred when I tell you this. The market has rallied on the fact that there will not be any new regulations, meaning Hillary did not win. There is not a continuation of Obama. Those regulations that were strangling business, like the coal industry, energy industry in general, are all going to be halted and reversed for the most part. Where you're still going to be getting repatriation. It may take longer than expected, but will happen. We will be getting tax reform. May take a little longer than expected, but will happen. And we will be getting that deregulation. A lot of that the president can do without Congress by executive action. So all of those things that are positive for the net positive for the markets are still out there. I think it was a little naive of the media to think that would all happen like day one. That's just not how things work. Things tend to take a little longer than most would like, but I do believe that all of that agenda will happen. Why do I think that agenda will happen? Because it is the Republican agenda. It is not just Trump, it is the Republicans. That is what they've run on, that's what they ran on, that is what their core beliefs are, and I believe that is what will happen. Does that mean there can't be, pullbacks and such? Sure, but the economic data, as far as growth goes, and that's what the market cares about. Growth is like oxygen. Growth is like crack. Growth is what PE multiples need to go higher in this environment. All of that data is moving to the upside. We've had GDP revisions to the upside. We have policy moving to the upside. it is a more bullish backdrop. All these people who are calling for these big pullbacks, and listen, we could get a 10, 15% correction that could happen, at any time for any reason. But anyone who's looking for a repeat of 2008 and 2009 needs to have growth reversing. When growth is accelerating like it is now, you do not get recessions. Old bull markets don't die of old age, they die on recessions, and we are not headed into a recession that I can see at the moment. That is your macro backdrop. Let's get into the market keys. The VIX. Remember what I said? Long periods of downtime with kind of momentary spikes. That is what's going on here. We haven't even gotten a trend line touch up in 17s. It's been so long since we've hit 17s, I didn't even know that it was even possible at this point anymore. We had a little volatility this week. They tried to challenge the breakout of 13. They tried to challenge the 200 MA. It did not go over well. Any breakout that fails took us back to the end of the range. We are still making some higher lows, and volatility may pick up a little bit. There should be some protection buying, in my opinion, into the new quarter. This could be forming a rounded bottom. Summer technically isn't the best time of year for stocks, but it can be, and it also could be a continuation of the low IV. So my take on that is this: anything below 13, there's really not much to talk about. Once we start getting a move above the 200 MA with closes above the 200 MA, maybe we get to see 17s. But until this trend here breaks with conviction, and I don't mean just a little action above it, until that breaks, I'm going to just assume that we are in the same pattern. It will break out eventually. In my view, the risk of volatility is either sideways to higher, with sideways being highly probable. The dollar. Now, I've been talking about the dollar forming a head and shoulders top for a while, but I said I thought we would have a rally because we had this instance here. Now, anyone who follows me for a while, first of all, I thought we were going to get a bit of a trend touch once we saw this break, but I reversed on that very quickly when I saw what took place. Now, for those of you who have been following me for a while, let me get rid of this oval. Does anyone know what this is, what this candle represents? The answer is a look below and fail, meaning this was the reference low. We looked below the range and price didn't accept, and we get a move up. When you look below or look above and fail of a range, you usually rotate to the other side of it. And we're right here below the 50 MA, at least to the prior supports. So we're at a critical level. I wouldn't even surprise me to see the dollar rally still higher up to the downtrend line. I still think the head and shoulders pattern could be in play, but it wouldn't negate until you start cracking above these 102 quarter-ish. If that happens, Katie bar the doors, I think the dollar would go back to the old all-time high and maybe even significantly higher. That's yet to be determined, yet to be played. As far as I'm concerned, the dollar is a short on bounces until it is proven that it is not. So I didn't think we'd get a full breakdown here because of this, and kind of the this N pattern or whatever we're forming. Often there can be a double bottom. Everyone always assumes it's just going to give, but if it's been multiple days, it can often be a point of support. So we're just below the 50 MA. If you want to have some, I don't know, right or right out trade, you could try the 50 MA. For me, the better play would be at the downtrend line. I do think that like I said, I do think though that rallies in the dollar probably are shorts until they are proven not to be. The bonds, we never ever got the full rotation to the primary trend line. Let me try and zoom in here. Simply, I'm getting a little better at this with the charting, but not great with the time. Anyway, what do we have here? We have a lateral range. This was also, remember I mentioned to look below and fail. We got back up to basically kind of the top end of the range, and now we're just pulling back. So there's a couple of good things that are in the bond favor. One is that the Fed has said that they are going to basically be lower for longer. They're not going to be aggressive with raising interest rates. It seems to me that 2 to 3 more hikes this year are off the table. It's more going to be like 1 to 2 in my view. We have a 100 MA here, a 10-day MA, a 50 MA, and a 20 MA. And look where the 20 MA is, right at the Fed day high here. So anything above 119.21, I believe you can play by the dips. If you start losing that level, you might want to stop out. Yeah, so I like playing maybe if there's a pullback to the 50 or a pullback, maybe even to the 20. I think you can kind of buy the dips, in my view, at least for a bounce point. As long as, like I said, we hold above 119.21. Below there to me would be more problematic. For the haters out there, HYG, like a boss, held the 200 MA, which is the key MA for that instrument. You can see we've had look belows and fails before, and this time was no different. And now we're back up. As long as that 200 MA holds, there is no recession or credit crisis or worries to talk about. I don't want to hear it. Talk to the hand until we get convincing multiple day closes below the 200 MA. I also believe this double bottom here, this last swing low of like 85.99, so let's just say 86. If you start getting below 86, then maybe we would start entertaining that conversation of a bigger pullback. Maybe the pullback in oil would be more of a problem. Wouldn't surprise me. Look at this. We sort of had this old uptrend. For this just kind of to mosey on up to it, I think people might be get themselves a little over their skis there and not realize that it's a backside touch and there could be a pullback. But I don't really care about this indice as long as it's not doing this like prolonged crash pullback. That is not what is happening here. Like I said, as long as we're holding in and I think got a lot of people nervous, but I think it was really more just a pullback. We've had those before. So, like I said, 200 MA on this is the key. Let's talk about bond proxies. This is one thing also that has me not thinking rates are going to go up too cray-cray. This was forming a head and shoulders pattern. This is the XLU. This is the utilities, the kind of the bond proxies. And I'm going to tell you the two school of thought here. People think there are two lines of thinking here, and I'll tell you what I believe the correct one is. One is that there is a recession coming because these safety plays are back in vogue, and you have a failed head and shoulders pattern here developing. And I do think pullbacks to the trend line here, which are roughly in line with the 50 MA, are buys. The other school of thought is, and this is one you probably won't hear on television, the revolution will not be broadcast, ladies and gentlemen, is this. The Fed has now come out and said that they're going to not raise rates aggressively, and I think people are piling back into this chase for yield play. Whether or not that's healthy or not, I believe that's what this is. I don't believe that this is a sign of a recession because I said that the growth numbers are increasing. I think it's people getting complacent again and they're chasing yield because they realize that bonds aren't going to be imploding, and as long as it's not imploding, they can kind of put on their yield plays again. So, listen, I could be wrong, but I'm probably not. Oil. Now, I keep hearing the bearish case on this about the inventories being up a lot, and yeah, I get it. They're overproducing, but what I think is going on here is that the Saudis want to bring their Aramco public. That's like the Exxon of Saudi Arabia. It's bigger than Exxon. I mean, it's the big boy. This could be the biggest IPO of all time. Oil broke the trend, got the 61.8, had basically a triple bottom here, and now back up into range. I think it's looking for the 50 MA, personally. if you start getting below 49.61, I think you could be cautious again. But as long as we're back up into this range, because look, you came below, you rallied back up. This was the check back that failed, and then you had to look below and fail, and now you're back up into range. Everyone knows about the inventory issue, and we know that we're coming into a seasonally bullish period of time for oil, summer driving season, and they're going to be shutting down, to do the switch over from the heavier wintry crude into the lighter summery crude. So a lot of that inventory will start getting sopped up. So I am right now a little bit bullish on oil as long as we hold 49.61. This was a bit of a head scratcher for me this week, this Exxon. I've been slowly selling some puts in this and getting myself a little long. And I don't really know what to make of this day. Look at this big spike in volume. You had a breakout of the downtrend and over the 50 MA. I actually added to the position a little on the breakout over the 50 MA. The next day, I was expecting a bit of a pullback, maybe to the 50 MA max, but holding the candle. And we basically took back the entire day on increased volume, but lower than the prior day. So which one of these candles were real? I can't really say. This could have just been end of quarter shenanigans. We're basically right on the 20 MA here. I will say this. If we got over this candle's high, 83, 87, I would probably even add to the position more. If we start really getting below this today's low, this 81.94, and we could see we just held that on Friday, I might start being a little bit more cautious with Exxon. This to me and other properties, Chevron and BP did not have this large of a pullback. I have a feeling this could have been an end of quarter issue. So we're going to wait and see. But below the 2-day low, if you want, if you're inclined, you could try a right or right out short, maybe down to 81. But above this high, I think would start, look at this. We're basically in a range here. We're starting to make some higher lows, and I would think would continue on. So Exxon, I'm a little cautious below the 50, but back above, I would probably get a little bit more bullish. China. So what's going on in China here? We still have a trend line and a 50 MA here. As long as that kind of holds, I'm okay. This is kind of really the area where it kind of broke out from. If you are looking for a long, I think you could try row at the 50 MA or on a break of the downtrend. I don't really play FXI that much until there's been like protracted declines, and then I kind of start dipping the toe. But what I more often than not look at are BABA and BIDU, and I've been fairly bullish on BABA, saying I thought we would get a retest of the old high. However, Thursday, look at what we have here, a look above and fail, and now we're coming back down. This theoretically should rotate now back down to the lower end of the range, which could be as low as maybe the 50 MA or maybe even as down to 100. So what I would do is this. If you want to play long, I think you could buy stop it up over 110.45. If you want to play short, you could use that as a stop, or you could even use Friday's high as a stop, 109.12 or 110, just, whatever. It depends on your level of risk. For me, this would probably be the stop. If you want to play, if you kind of are still bullish, but you want to put on protection, or you just want to play for a quick pullback, just buy a put spread or a put ratio, meaning you buy these, or sell 2 times out of the money. You could even split it and do a bit of a butterfly, like buy these, sell these, and then sell lower if there's juice. But I'm a little cautious with the look above and fail. I think this may pull back a little bit. This was also a big reference high level. The question is this going to pull back real steep? Is it going to be mild? I'm still in a BTD camp as long as the 50 MA holds, and I would be a buyer of the 50. BIDU, I think the smarter play, and I've talked about this, is to just play the wedge extremes. This got down here. I talked about it at the time. We bounced at least to the 200, which is what we had discussed. There's a mini decline here. If you can get above there, I think we would see at least the 50 MA, maybe even a rally back up to the wedge high. We do, however, have earnings coming, and I do believe that this earnings season has the potential to break the wedge because we're getting narrower. Here, it didn't quite do it. This was a look above and fail. It doesn't surprise me we're at the lower end of the range, and I had discussed that at the time. We need to see this wedge break with conviction to have the play. So on this earnings day, on 4/27, there should be a gap below that I think will be a go with, or a gap above that I think would be a go with to fill up the triangle. The gap down should take you, in my view, at least down to like the 154s, 155s. The gap up, in my view, would take you at least to the 190s, let's say closer to 200. So that's my play. I want to wait for the earnings and do play in the direction of the gap if it's a wedge break. IBB. This is just a mess, right? We got another move up to the highs, double top, pullback, 50 MA held. I'm fine with being long. I'd rather buy the channel low at this point. If you're long, I guess as long as the 50 MA holds, this was a look below and fail. It kind of stalled at the 20, so it seems like the 50 is supporting and the 20 is resisting. I'd either buy the channel low for RORO, which would be close to the 200, or wait for momentum and get a break and maybe some closes over the 20. So that to me would be more interesting in IBB. This Gilead is just a total bow wow, right? Similar type of a situation. I don't even like talking about this stock anymore because there's really not that much to do here. 20 MA has been the problem. 50 MA has been an issue. It's just a series of disappointments. If you can start getting some closes above the 20 MA, though, I'd probably get interested in a right or right out try. The ideal scenario, in my view, though, would be for this to continue to pull back ahead of earnings, take out the low, make a new low, run all the stops, and then this thing will probably go. So this might be a Costanza. If it runs ahead of earnings, it's probably a short. If it's down into earnings, it's probably a long. It seems to me that they have like margin pressure, though. The 100 MA has really been the killer, in my view, though, in Gilead. Look, see, this is where this really stalled here, stalled here, stalled here. You really got to get over the 100 MA. So, like, let's say for earnings, there was a gap above the 100 MA and go. I think that could take you to the 200 quick. But anything really below the 100 to me is a little bit more iffy. IYT, the transports. Remember when I was bullish and everyone was hating the market, and this was the beginning stages of the IYT? I said inverse head and shoulders, and I said markets that do this aren't bearish. Now we have the potential to form a real head and shoulders at the top. Notice I said potential. That does not have to happen. I think a lot of people just assume things happen. Why do I like the head and shoulder setup? For two reasons. One, we now have a lower low on the right shoulder, and we could potentially have a lower high on a right shoulder here, like this. Like if this came up here and then rolled over. We did break the downtrend, and I do think that there could be a little bit more rally, maybe to the 50 MA. I'm a little cautious in this. FedEx is showing a little bit more strength, so I have a little faith. The 100 MA here has been resisting, so I think you could buy stop this over the 100 MA for a move to the 50 and maybe even a little higher. But below the 100, I'm still a little cautious. This is technically in a rally leg, but it's not doing it with a lot of conviction. So I think that the move could be to the 50 MA, but I am kind of bracing for the eventuality or the potential for a lower right shoulder and then maybe a subsequent rollover. Look, it takes time to build out. It's not like a pinprick, so this could take days or weeks. So just keep that in mind. FedEx, keep in mind also that this, let me get the old trend line going. This held the range low, right? And bounced up to the top of the range. So until this really loses, like if you want to short this below 183.87 and like the double low, this to me would be cascadey, maybe even down to 169. But as long as this double bottom holds, this range holds, like the range high to me here is 198.60. The low is 183.87. As long as we're ping-ponging in that range, there's not much to say because that could just be a big bull flag. So wait for FedEx. That's been the leader. That should lead the way. That to me is sort of like the Exxon in oil. Copper. This was the other big move. I was saying that Dr. Copper broke. Look at this. It formed this kind of round, this pan bottom, broke out, retested, and now just flagging out. Until you get a trend line snap here, a break of this low, this 255.85, there's really not that much to see. It's kind of struggling at the 50 MA here, but you had a look below and fail, and now a look above and fail. So I would either short it below this 2.5665 or long it up over 2717. So long over the high here for a move back up, or short below the low for a move down to the lower end of where that triangle would be. The proxy a lot of people like to use is Freeport McMoran. Look at this. Broke out, pulled back to the 61.8, and then rolled over again. This was a look below and fail. I usually don't like 61, and look, below the trend too. So this really had every opportunity to fall apart, but it has not. So, excuse me, this rallied back up. So this held. That's important. This is a bit of a regression line I drew in. Until you're on the right, like if you want, you could try a right or right out short at the regression line, maybe the 50 MA, like this 1406 level. That was sort of like where we broke down here. Look, this was the range high. This was it. Then kind of again, when we moved above it, it was up. So it's a significant level. This should technically resist now if this is going to be weak. But it seems to me like copper might be trying to firm. And we do have, no, let me go back to HG. I wanted to show one thing. Yeah, we talked about the symmetric triangle. So we had the look below and a look above. I like a short below and or a long above. Sorry to repeat myself again, but I wanted to show the triangle. I had in my notes here the triangle, and I thought I mentioned it, but I didn't think I mentioned it sufficiently. Remove drawing. All right, so XLF. Oh my God, the financials aren't up every day. Look at this move, for crying out loud, that this thing made. I mean, this was straight up Paul Abdul style. Look, I can tell you this. I think longer term, the financials are kind of going to be back with a little bit of deregulation. But I can't tell you short term that this didn't move too much and doesn't need to pull back, maybe do the retest the breakout point. This was a bad tick, but those who follow me again for a long time know I'm superstitious. I see this, the machines see this. 22 was where the low was. Oddly, that was the kind of the breakout and close to the 61.8s and the 200 MA. So if we get back down there, I would be a put seller. If we could get back up over 24.84, maybe it firms a bit. You know my view on this. Look where the breakout was from, the 50 MA. Support here, 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 and we're below it. So below the 50 MA to me is still vulnerable. Above it to me would firm. I'll keep it simple, stupid. All of these stocks look like that, by the way. JP Morgan, same, bee's knees. I actually use this drop here in here to sell some out of the money puts. Small, with the full expectation that we would come back down here to 83, maybe even to the trend low. Look, we moved from channel low, we rode the channel high, pulled back kind of to like this secondary trend line here, held. Now we broke above the channel. I do think we may migrate down to that low, fill in the gap, get into like this consolidation level. Again, below the 50 MA to me is weaker. Below 88.17 is weaker. Above is a little stronger. But I do believe that that move back down into here is a buy, particularly a put sale opportunity. Golden Slacks, a potential head and shoulders setup. Again, look, with a lower right, potential for a lower right shoulder. Don't know that that happens. This isn't a really pronounced head. The head is not that much higher. What I like to see is like a bigger one, where the head is way above the shoulder. Excuse me. Look where this would kind of got close to. So I don't know. This could also see the trend. Look, remember I said the first expectation was a bounce off the backside of the old up channel. That usually doesn't work the second time, and it has not. If there is a rally up to like the 50 MA and the old trend, I think that could be a right or right out short. Look where that is. That's where where all these lows were, and where the 50 MA was, and where the real breakdown took place. So I think that area could be a good right or right out short. I'd be a buyer though, down near the 50% fib and the trend line there. I'd probably sell 61.8 or below out of the money puts. If this takes out the head, the 255.15, you could buy stop that also, because that will not hold it. This thing would go a lot higher, maybe even at the very least to 268.57, which is the 1.618 Fibonacci extension of the consolidation range. I was going to do Bank of America, but why not? We'll do a little bank, right? Got close to range low, again, below the 50 MA. If you have the Huevos Rancheros, you can short against the 2-day high here, which were 2 stalls at the 50 MA with a stop above it. If you want to long it up, you could just buy it up over the 50 MA for a move back to the upside of range. We basically got 2 times range, though. Remember, I was talking about this being the target. We got just below there. So bank had a heck of a move. I'd be a buyer of the trend line for faux shizzle, at least for put sales. Let's get into the major market indices. The expected move this week is $2.43. That would take you up to 238.17 or down to 233.31. Sorry, I know this is a complete mess. Let me zoom in. Just let's keep it real simple, stupid with this. This was the big gap up day. Since then, we've been making lower highs and lower lows. We had this big bar, right? This was the end of the world. Consolidation. But look what we had here. Double lows. And you had a gap down that took out the 50 MA and then came back up into range. What does that mean? It was a look below and fail. What do look below and fails do? They rally. We are now 2 failures at the 20 MA. So if you want to be short, you can use 236.52 as a stop. If you want a long, you could use a move above 236.52 as a long, and the target would be the trend line here in 238s. That would be roughly where the gap fill is at 238.48. So somewhere in that area would probably be where this might stall. However, if we do get above 237.61, all of that bearish energy will be taken back. This, keep in mind, was a kind of a cascadey day. I think it was fairly benign volume, right? I mean, a little bit more than usual, but nothing special. So it shouldn't take a lot to get over that. So I like a buy stop up over these highs, 236.53. You can see where I have my alert. I would be an interested right or right out buyer there. If this does fail and you lose, let's say, this low to 35.27, and the 10-day, look where the 10-day was a little resistance. You lose the 10-day, I think we would get a move maybe back down to the 50 MA and this channel low, and then, we'd be, again, another lower high, and we would assume that we would maybe come back down and at the very least retest that low. But the 50 MA, this is, again, also on a daily, look at this, a cattail, a hammer, a low, and then, again, a higher low. This is technically a secure low here. So I'm assuming dips are buyable until we start losing the 50 MA. If we lose the 50 MA again now after 1, 2, 3 kind of days screwing around there, then I think we'd get a rollover to the 100 MA and get the retest of the real breakout, which was in the 228s to 229s. That area to me would be an interest. Another loss of the 50 MA, then I would like short. So you could do 2 things. If you're aggressive, you can use these 2 days as a stop. A break of the 50 you would add, and then you'd be looking to cover down near the 100. If you want to play the long, just buy stop it up over the 2 days. this, to me, the rest of this would not really resist, and I think we'd fly up to the channel high. So that's my take on SPY. Excuse me. IWM. Now, this, to me, is quite interesting. Look at this. You had a lot of hammers here. Here, a look below and fail. Another look below and fail. And now you're basically at the downtrend and the backside of the old uptrend line. So, let me zoom in a little more. So, this is how I like to play this. Friday was a big doji day. The 50 MA is right here. This is getting real close to this kind of old area. So what would I do with Friday's range? I like short below for a right or right out trade, or long above for continuation, for right or right out, of course. So Friday's range to me is key. We did close technically above the downtrend line. So a move above that high should theoretically have continuation, correct? This, if we were to get below that low, this would have now been a look above and fail from a lower high, and this should rotate down maybe to the 100 MA. So that's my key. Now, what has me potentially... Oh, the expected move in IWM, $2.19, so 139.67, or down to 135.29. Remember, I caveat the moves to the upside because we're in low IV are probably max moves. Moves down could be more because IV would pick up on a move down, given where we are in the range with regard to VIX. Looky. We finally got the 1.618 Fibonacci extension in QQQ. And Friday, not so convincingly, but albeit, was, yes, ladies and gentlemen, yes, boys and girls, still a all-time high. Not exactly a bear market when indices are making all-time highs. Like I said, not a very convincing one. This could just roll over again, but we are technically at a new all-time high. If there is a pullback and you want to play aggressively, you can short below the low, 132.13, for a move down to the 10-day 20 MA down about $1. So you can play for $1. Above that high should not resist, and it would be a continuation on of the breakout and could even continue on to this now regression line. Let me make it official. I like to do the dots, right? Could mosey on up even to 136s. So below the 2-day low, I like short for a move down to the 10 and 20 MA. Look, this never even got the 50 MA, right? Never even lost the range low. That shows you just how bullish this is. If this were to roll over, my target really would be probably the 128s, which may coincide at the time, wherever the 50 is, maybe around there. So keep an eye on that. 2-day highs, I like long above. 2-day lows, I like right or right out for a quick short. The expected move is $1.35, so up to 133.74, down to 131.03. Let's get into some of the big boy and girl stocks. Apple. So let's discuss what should and shouldn't happen. I think that's really what is important here. So, gosh, I hate how this looks. All right. So look, you had this day. Look at 140.15. This was a big up day. A lot of consolidation. A look below and fail. Remember I said I thought we would at least see that. Again, we did. And then this day was a look above, a big candle day, a look above and fail, and then came down. The 20 MA is what's been holding this. So my take on this is once you got over this kind of high a day, Apple kind of reversed the pattern, right, and went higher. You've had now a couple of 3 sessions of high and tight in that range. You wouldn't want to see this give back more than kind of the halfway point of this bar, which is also the body of this candle. So you could use the 10-day MA, roughly 142s. You don't want to see a loss of 142s. But as long as we are 142 and above, I think the path of least resistance still remains higher in Apple. If you're looking for a short below 140.62, this whole day here, if you lose that range, I think would be a short, maybe even down to the 50 MA 134s. Microsoft. 50 MA, I've been saying for a while, is the key, and it has held every time lately. See? New all-time high. Until you lose the 50, it's either a no-touch or a long. Yeah. If you were to lose 62.75 and the 100 MA, which I think would be, like if you lose the 50, you'd probably see the 100, and my guess is it would probably remain a buy the dip until that is lost. If you lose that, then lower. But Mr. Softy is strong. Speaking of strong, I've been pretty bullish on Amazon. And oddly enough, Amazon was the same setup as Apple was. Look at this. This was kind of a wedge, and I had said I thought we'd see higher. This was a look above and fail. And it came down to the range low very quickly, but rallied a little bit, and then here was a look below and fail of the 50 MA and the range. So what happens? It rotates all the way back up, and look what we're in here. A big old up channel. We are now very, very close to we were at my measured move level. The 1.618, though, is still higher. So what would have to happen here? This would have to kind of just ride the lightning up higher. This has happened before, but it usually has a little bit of pullbacks first. So I think Pops and Amazon may be an opportunity, unless this thing just is going to go full on, Keep in mind we came from the range low and we're getting up to the channel high. So I do like booking profits here on rallies. I'd be a buyer of dips around this 862.80, 860. 86, that's the 50% fib. I don't know, the 61.8 is down at 855. I mean, that's a pretty big point pullback, but any pullbacks in Amazon, I am a buyer. I think the stock will continue higher until it's proven not. You do have earnings coming up, and the more this rallies up into earnings, the less long I want to be. If this were to pull back off an all-time high, particularly a shake and bake, maybe to retest the channel low, I would be very, very interested. But until then, I'm a seller right now on rallies, to profit taker, not a short, but would be looking to buy the dips. The main trend is still higher in Amazon. 50 MA is the key there. Facebook, 20 MA is the key in this one. I really hate how this stock is trading lately. It's just, look at this. You have these a lot of up days with very little point gain. I'm expecting one of these days, I don't know when. Look, the 1.618 fib is close, 145.83. It's very possible we get a move up to 152s on earnings, and the progression lines are up there. But what I don't like is how we're getting there. It's like multiple days of going up and going up. And the risk, of course, is like one big gap down day that kind of takes out all of these days of buyers and then kind of washes out a little bit more. Longer term, I'm very bullish on Facebook. But as this continues the grind up into earnings, I like the idea of maybe booking some profits ahead of the number. If there was a pullback to like the 133s or even the 50 MA at this point, I'd probably be a buyer of the dip. So I do like the idea of lightening up a little bit into rallies. Netflix, new all-time highs. 50 and 20 MAs to me are very important in this one. Again, a bit of a kind of a grind fest. As long as this kind of holds the 50 MA, you can see it held here. Dips to the 50 MA are buyable. Until that loses that, it's all right. If you lose the 50, you could try short. I'm hoping maybe for the gap fill, right? Reminds me of Quantum Leap, hoping each time the next leap is the leap home. But yeah, this thing is just, again, look, it's took out that high. Not by a lot, but the stock is bulldog stock. 50 MA is a BTD until it is proven not. Google, a lot of people are getting bearish. This was technically a look above and fail. Filled the gap. As long as it holds the 50 MA, to me, it's okay. A lot of people bearish on Google because people are pulling their ads, big companies, because they don't like what those ads are coming after, like white supremacists or whatever. But this is a short-term issue with me with Google. I don't think that is going to be an issue. That being said, Google is not historically strong in the summer and usually has some larger corrections. So I am cautious on Google. You'll see this will be like the summer of Google. This thing will just take off completely, but I'm a little cautious on Google short term. I'll leave it like that because those ads are being pulled, and that can't be good, at least short term, for earnings, and you'll get the freakouts and the huge. I was hoping NVIDIA would get a primary trend touch. It has yet to do that. Look below and fails on the 50 MA. This just knifed through it. We got back up to it and kind of just grinding. I don't know what NVIDIA is going to do here. For the very reason of the curious case of Ambarella. I want to show this to you quickly. Look when we had these double tops. See, there was this kind of grind, and it took a while. And then once you lost this reference low, you got back up to it, but then that was kind of like a lights out Gracie. I think NVIDIA might be the same kind of a situation. Look at this, the double tops. You grind here, and then I really need to see this area get lost, these reference lows from a lower high, for the real rollover, which then would occur. So I guess as long as you hold the 50 and the 20 and the 100 MAs, it's still okay to be a BTD guy. But if you start losing these 99s down to 95s, I think then it would be the stock would have topped and would be a short. Tesla. I guess I was speaking English, right? 265 is the key, the door. You had this move up, failed there, came down to a higher low, and now back up at it. As long as this thing holds 265 on pullbacks, and the 50 and 20 look like they're moving their way up, I think that the old all-time high of 287s were real close to there. This should not resist much. I have said for a while, I think as long as we hold 265, 306 is in play. Below 265, I would say I disavow all knowledge of the trade. One of my favorite stocks, the BTD, is PayPal. For whatever reason, whenever we get up to this line, the stock stalls. Excuse me. The easier way to play this, and the way I have played this, is on all the pullbacks. Sell out of the money puts. 39.44 is the 61.8. 40.41 is the 50% fib. I like selling puts that are near basically 40 or below at this point on pullbacks. At some point, I think this stock will be a takeover candidate, believe it or not. GlaxoSmithKline, pretty bossy action, right? However, we did stall at the 61.8, and we are now back below it. I am, however, a buyer on dips. And where would I be a buyer? Let's draw in our new Fibonacci level. We don't use 38.2s on pullbacks. We use it on bounces. All right. So where would I be a buyer? The 50% fib is around 40. 39.35 is the 61.8. Real breakout here took place around $40-ish. On pullbacks, I like selling out of the money puts at 40 strikes or below. Sonic. This is one I dipped the toe into. I will live to regret this, but right now it's all right. So this day was when they reported. This is, wow, I got way too many. Let me clean this chart up for you all. Remove drawing. All right. They reported a stinker of a number, and the stock went up. It got up to the 200 MA. I put in an order to buy it at the 50 MA. During this day, it wound up getting me long. Here you had to look below and fail, and you're just consolidating. So what is the plan? I'm just sitting in this for a while. If you want, you could use a below 24.82 as a stop. There's consolidations below the 50 MA. I actually had put this order in for a buy at the 50 MA, not thinking it would hit the same day. I thought we would get a move up here, and then you'd have multiple days of pullback that would get to it, and then it would ping and go higher. This did it a little quicker than usual. You could either use a move below 24.82 as a stop or below 24.03. I bought it at $24.95, I believe. So I don't know. A buck is fine for me. If I were to lose, I may do. I don't have a lot of size in this. If you do it with size, you can use this low as a stop. If you want to give it a little more room, you could use this. Either one to me is fine. However, I would add above 26.72. Particularly if there's like multiple days of consolidation, we get up here and just screw around and then go. Over this high should take it, in my view, up to 28s. And my eventual target with this, I think, was like 31, which is where the gap starts here. Look, 31.21. Maybe it gets above there if the 200 MA. Look where this held, and then this is once it got below there. So this was the first retest of the 200 MA. If you can start getting a move above and closing above, I would be more interested. I do like that this is now a higher low. I do like that this was sort of a game changer, and I do like that we're holding over the 50 MA. Not a huge fan of it or whatever, but it is what it is. Snapchat, not really that much to say about this stock. It's young, dumb, and you fill in the blank. We're basically on a trend line here. You're above the 10-day. I sold puts here. Yeah, they basically moved down. I talked about it in the week video. It got up to the IPO price of 24, where I said there would be resistance, and now we are pulling back. I think you could use this low, 21.33 is the last swing low, as a stop. Yeah, that to me is all right. I have some short puts on, and it might basically have a break even on that play. Lululemon. This is a classic bull trap, and I should have been more vocal about being bearish on this, but I did say I was leery. Some people were asking me. I said that this would be a go with if the move was up, but I was leery, and this was a big gap down. It is basically near the trend here, and I will say this for the stock. Below 54 is still iffy. That to me would be an upside bounce target. If you want to do short on this, below 50 half should have continuation, maybe down to the range low of 43s. That is my area. 46 to 43, I think, would be an interesting area to buy the dip. But if you want to still be short this, below 50 half. If you are long and you want a stop area, that is a good area below. Anything above this, like 52.90, you could try right out long. I don't know that it won't stop at 54, though. That was the old support. It really should have held. But that is the play. Above 52.90, I think you could try long, or short below 50.50 for a move still lower. Nike, I talked about this. This was basically a check back to the breakout, pull back basically at the 50 MA. I think you could be, as long as like 55s hold now, it should be okay. But this didn't quite fill the gap. It just seems to be pulling back a bit. But I have some short puts from in here and trying to hold them for a little while. Chipotle. This was one I was a little bullish on, right? I talked about this having this day here, I believe, one of these days, there was a downtrend break. And I said I thought we'd have a move up, and boy, did we. But we're now near the channel high. This was really kind of this has exceeded my target. I really was just looking for a retest of these highs, but we now got the channel. Could pull back, but this is looking better, right? Higher lows, higher highs. They have earnings coming up. If this keeps rallying ahead of earnings, it'll probably be a short. If this pulls back, it might set up for long. I have a long-standing policy. I don't F with Chipotle on earnings. I once had a strangle on, and it was one of those really big over moves, and I just don't do it. If you're going to do it, have a defined risk. I'll just tell you that. Don't be short any naked premium. I have no problem trading Chipotle. I love to trade Chipotle. I just don't do it around earnings. So I will wait. And after the rally it's had, probably a good idea to, at the very least, book some. not one I talk about very often. This was one that a follower of mine actually brought to my attention. I saw this here, this double bottom, and bought it, buy stop over the highs. It's working a little. This was a break. This was the old trend line. I think my stop will basically be a little at or below break even, maybe the 10-day AMA here, now that we're over the 20, which I kind of like. I think we could see the 50. That's sort of what I'm playing for. What I'm really playing, though, for is a play to where this breakdown took place here around the 18s. I have good trade location. I'm trying to hold it. Obviously, this is in one of the REITs. The mall REITs are getting their you-know-what's handed. I can't even draw a trend line, right? I mean, why do you guys watch my videos? I can't even draw a damn trend line. So we're getting close, right, to the downtrend, and close to the 50 MA. So that would be a first target to at least book half. And this should be in a red, right? A big nasty red, because it's a really nasty stock. So this to me could have been a look below. It seems like it's trying to right the ship a little of earnings coming up. It's just down a lot. It's got a decent dividend. I ideally will be out ahead of the earnings, but if I get my move, if not, I'll hold it and just use a stop. AMBAC, one I was bullish on a while back on the breakout. It got up really quite high. We booked profits of this pretty well, and we filled the gap. This was also the 61.8. I talked about loading up again. I sold puts, and it's rallying. So I'll use a break even as a stop. My target would be maybe the 50, 200 MA area, the backside of the old uptrend line around $20. That was also this low here. So 20. Playing for a move to 20. Anyway, that's the end of the weekend review. I hope you enjoyed it. If you liked it, hit the thumbs up. The best way to say thank you is to favorite and retweet. And I will see you guys and gals either Wednesday or Thursday for the interim week video, the, I guess, YouTube Live. Have a great weekend, and cheers.